Welcome to the Twomey Stock Market Report. Today is Monday, Labor Day, September 5th, 2022. In this YouTube video, we're going to try something a little bit different, shake it up. What I want to do is first alert you to the new TwomeyStocks.com website. That's the number 2, MEstocks.com, as you can see up here in this address. And there you'll find all the information we've been going on, and actually, there's a tremendous amount of detail because it also includes the newsletter. So you go to the homepage on TwomeyStocks.com and you'll see a couple of links right off the front. There's a weekly video report, and then there's view our trade table, and then the newsletter. And of course, this is all free access, right? So let's go right to the trade table because a lot of people are interested in what's happening. This is as of close, September 2nd, 2022. We'll just gloss over this because you'll be able to go to the website at TwomeyStocks.com, pull it up. You'll be able to save it on your desktop, and you'll be able to review it as you please. But basically, it gives you the entry of the stock, what stock we're trading, and if or not we've sold it or holding it. And as you know, with the Twomey Stock Market Tips process, that's a very instructive way to trade. And we'll go through that a little bit here today. But we do break our trades up into thirds. 1/3 after we make our trade, we put a 1/3 stop, a second 1/3 stop, and then a third that we hold and await our sell signal. It keeps us in the trade longer, and it allows us to monitor the market. And if we have sudden changes, we lock in our profits or reduce our losses. So we did last week on Monday the 29th, or the weekend before that, actually issued the sell signal to get out of our long positions with the market downdraft that started the Friday before. And we did get some gains. And basically, we trade the diamonds, the SPY, the NASDAQ, and the Russell 2000. But we use Schwab ETF funds. They're a little bit lower price, so you're not buying $350 per share for the QQQs. We use XLK, which is not a Schwab fund, but very similar. And, it prices in at 143. So we did get some gains there. And we are now totally out of those long positions. We also issued a buy signal for the short, all the indices. NASDAQ is PSQ, the diamonds is DOG, DOG, SH for the short of the SPY, and the Russell 2000. And last week we saw continued declines. We got some stellar gains there in a week's time, somewhere between 3 to 4.7% in those. Notice here far right, this here is the RSI. We've talked before, if you've stayed up to date on our newsletters, relative strength index. We brought that up a couple of weeks ago saying how stocks were in, especially these indices, were nearing overbought. When you get over 70, that's an overbought territory for relative strength index. When you get below 30, it's oversold. We start watching when it gets over 60. And we were in the mid to high 60s a couple of weeks ago, and we reference that. We say relative strength index is not the end all or be it all data point that you should trade off of from a technical perspective, but it certainly is important. Okay? So you want to take a look at it. We did say that they were rising. We did expect some type of leveling of pullback. And, sure enough, we did get the pullback. And if you look at them now, where are they? They're in the, nearing oversold situation, mid-30s, right? The NASDAQ's down at 32. So, now we're seeing tremendous volatility, even though the market swings, 1,000 points here or there. It doesn't seem like a lot, but the technical data are screaming. There's something going on. No trade or trend is lasting, and it's fluctuating back and forth. A lot of reactive trading. Right now, if you look at our shorts, we've been in our shorts a week, and look at the RSI. It's up in the mid to high mid 60s. That's screaming that it's getting near overbought. So, what's going to happen next week? Or this week? Is it going to level off? Are we going to start seeing some abatement in the short, when the market rise a little bit, leveling these, bringing down some of these high RSI numbers. You can have a high RSI if in markets tend where there's not a lot of volatility. For example, when there's a long bull market run, which we just came out of, things like Apple and Tesla, they could have high RSIs at high elevated prices, but there's continual buying. So that can be an indication, you just got a mature market. But we certainly don't have that. We're going week to week. We're going from 35 to 65 in a matter of days. We're still holding our dividend play. Verizon, we're going to probably start. That 1/3 remains. It's been we got hit pretty hard on that. We may be getting rid of some of that. Let's see. We've got all our energy plays. They're up. We did get stopped out on some of them. 1/3 and our third stops getting stellar profits. The PAA is 11%. Our utility play is, we got 9 and 8%. That tends not to be a big runner, but and U.S. Steel, we got 19% on our second. When one of our third stops hit, and then the second one we got 16%. We were totally out of that trade, exiting at almost an 8% gain. So that was 1 month we got stellar profits there. ILF is our Latin America sort of commodity play. That's doing okay, but we also got stopped out there in our first and second, third. So the whole idea of what we're talking about here, and you can go back to this, I think we had our green plays for the green energy. Blink, we got 16 and 22%. Since August 19th. That's a heck of a trade for a couple of weeks. And we finally exited that because we got our sell signal. And when we got out, we gained 6%. So of that, that was a tremendous gain from, 6 to 21, 22% in less than 4 weeks. TAN is the solar panel ETF. That one we're totally out of as well. We got the sell signal. UNG, we still have a third. That we're going to go over. I'm going to spend a little bit of time and go over our energy because I've got some things starting to develop. But anyways, we still are remaining holding a third, and we've made gains 20, 17, 12, and it's still holding 15% in our last third position. We may be going into that again deeper. And so there you go. We've got some good gains, and I want to just bring that to your attention. Our bond fund, we're short. We got out of all our long bonds where we were parking our money during this summer rally. We didn't expect to get much, maybe a few percent. So we finally got out of all those. The last two were the corporate bonds, and we went long on the shorting of bonds, TBT or TBF, depending which one. TBT is the 2 times. We put in $1, and if it goes up if it goes up $1, it's a 200% gain. If it goes down $1, it's a minus 200%. So if you want to go 1-to-1 ratio, it's the TBF. Either way, we're up to 13% on that, in a matter of a month. So we saw, stellar gains in that from the January to June. Well, not quite June. We got out before that, in the 20-25%. So if it takes off and with rising interest rates, we want to be in it. We want to be in it. I always tell people, if you've got cash, especially for your kids or what have you, I-Series bonds, go to the website, treasurydirect.gov, and if you've got cash, you buy it and just don't worry about it. The next 6 months, you're going to get 9.6%. The last 6 months was giving you 11-something%. You got to read the detail. There's a lot of gotchas in there. You can max out at 10K, I believe, a year. But this is even if 5 years from now or 7 from years, interest rates are less than 1%. I think the next couple of years you're going to get some, anywhere from. Here we are at 9.6, may go down to 4 or 5%. You can't get that anywhere else, right? So it's a great way to park some money. So let's get out of that. And I want to get into our newsletter. And in the newsletter, you'll find, you can see on my screen here, you're going to see market analysis and trends. This week, we talked a little about what a fundamental a fundamental aspect to the market and stocks and companies. You look at the balance sheet, you assess the stock price compared to the balance sheet, and you do some fundamental financial analysis to give you an idea of the health of the company. Where do you think it's going to go forward? And ultimately tells you if the stock is worth buying, right? So one of the items, and there's quite a few, is it's a quick and down and dirty. One is many use investors look at the PE ratio, price to earnings ratio. So I go over that. It's worth reading, and it's something to take a look at. I also give you an example. You know how we talk about the Twomey investment principles that we talk about? We look at the trend in the market, we look at the macroeconomics, we look at environmental economics, and then we look at the sector, where the money is going, and then we look at advanced decline and some other things to determine trades. I give you the example of how I used that philosophy for a particular stock. It came up with some analysis. A great read, something to take a look at. And if you're unfamiliar with it, it's a great learning tool. Okay, so again, this is all free on the front of the page of the website, TwomeyStocks.com. Hey, what a great way to spend an hour before you go to bed and get this information, lock it in, and you're ready to trade. In addition to that, you get all the free trades. I mean, what else can you ask for? Other places, you can't get that. So we go over the Twomey investment process. I want to spend a little bit of time with this. First of all, let's look at a gross big picture market trend, right? This is from the beginning of the year. We talk about that in all our videos, but this is the rudimentary picture, if you will. The red lines shows the market, obviously downtrend. Doesn't take a rocket scientist to know that if you open up your 401k or portfolio. The summer, we had this blue uptrend. One of the things that caught our eye is it actually broke the red upper Twomey trend track line, gave us the impression with our other data that we go over in exhaustive detail in these newsletters and some of the videos that you've seen on YouTube. We're like, hey, is this for real? There was a lot of chatter that the Fed was going to end up having to reverse and pivot and start reducing rates in the first or second quarter. Well, Powell came out. He squashed all that. Meister came out, one of the Fed presidents, also squashed all that. They're both saying, we're going to raise rates. We need to get them up to 4.5%, maybe higher. We're going to continue the raising of rates until we put the brakes on inflation. In addition to that, we don't see them coming back down for some time. So rates are going up. They're going to stay up for a while, and we don't see pivoting because they feel the economy is still red hot. Why? Because, and we go over that here, and I'm going to touch upon that in just a second. But we take this larger picture, we determine the trend, see how now we're back into the down trend lines here the last couple of weeks. This is a daily chart, by the way. Each bar is a day, right? I'm sorry I didn't say that. So if we look at the daily chart in detail, we add a few items. We use EMAs, exponential moving averages, that smooths the data. Well, that's the wrong word. Smoothing data, it is over time, and it kind of averages everything out. Exponential looks at the most recent data and gives you a snapshot of what's happening now, a little bit more detail, right? So in here, I give you the definition of the EMAs, right? So you can go to the newsletter; it'll tell you that. But this is a busy chart. Just end it right here. There's this blue line here. That's the 200 EMA. It's a longer, it's a longer one. We broke that, 5-6 days ago. Then we broke our other shorter trend lines, the 9 and then the 14. Once we start breaking those or getting near those, we're anticipating a sell signal. We did receive the sell signal, and we got out. You see that in the stock table. And this week, what happens? It continued to go down. And we're back into this down trend line. There's a supply line down here, right here. What do I call supply? This, for a period of time, 3 to 4 or 5 weeks, we had sideways move. So this is a bottoming process. That was in June where we got it seemed to be bottoming out, and we started the summer rally. Uh, are we headed for that supply line? Don't know. I'm not in the prediction business, but if we get near that, it could be a holding pattern, because that's where people, one is if they were, I gave up and I sold down here because I couldn't take it. And then others who, so they're out of the market, and others who, and they might say, geez, those folks might be thinking, hey, I missed this whole summer rally. If it gets back to where I get out, it's a good time to get back in, right? So you got that dynamic. Then you got the others who got in at this supply line and raced all the way up in and haven't sold, hoping that it's going to bounce back and finally get back to there where they bought, and they go, I better get out, I'm break even. It's just the way we all think, right? Whether that's going to happen, whether we're going to reach that, that time will tell. I don't know. Relative strength index is showing that we're getting near overbought, so maybe we'll see a bounce this week, but hard to tell. So we go over that in the newsletter, and I just wanted to take that out, take a snapshot of that. I go over all what the experts are saying, comments that are affected a lot of the market movement out there during the week. Gives you time to look at it in a quick snapshot without watching and reading it every day. What else? We give you the trading impact and how we make our decisions to trade. We also talk a little bit, the environmental analysis of what's going on and why we chose a sector. And that's what I wanted to get into. You can read that separately, and it's a good technical indicator as well as brings in the fundamentals. We're bridging the gap between a technical trader who's looking at numbers and trends with what's happening fundamentally in the economy, right? Neither one is perfect, but if you marry the two, I found it really works well. So we get into the sector table, and that's what I wanted to chat with you a little bit about here today. I'm a big proponent of where is the money going. As we start looking at this, you start getting a feel. Way to the right, it's year to date. Way to the left, it's the most recent daily change. What I do is I sort it for the 1 month, right? And it's something interesting. Look at all the way at the bottom, minus 6.5 the last 30 days, if you will. Information technology. Well, you know what? It was number 4 last week. It was number 1 the week before, and it was number 1 for several weeks. This is how fast the market's moving. IT is, more towards the NASDAQ, if you will. Not all stocks are in there, NASDAQ, but they're more growth oriented. So they may not be making money, but losing money, but they're growing they're growing rapidly. So people are willing to overpay for that. Go to my first section about PE. We talk a little bit about that. It's a good education in the front section of the newsletter. With that said, now it's at the bottom. It was number 4 last week. This is very, very interesting. Energy now is back at the top. There's a lot of news about energy out there. What happened this week to us? I don't think I could open a website, turn on a news station without something about, especially Europe's energy demise, right? And we got 1/3 and our second third stopped out in a lot of our energy plays. It's really funny. The news was, I don't know if the news is old or if they were selling the news or what the story is, but we're either going to start to race off again on pricing on our stocks. We got infrastructure, we got the actual natural gas, for example. We got a whole basket of energy and a ETF, etc. They're either we don't know where they're going to go, but it's really odd, right? It's number 1 in our stock chart, and it's the only green. Well, for year to date, it's the only green, right? And then the only other one is utilities, which was a 6-month that ran green, but everything's been in the red. So with that said, we know the downtrend's back. We're kind of seeing a rapid movement in the market without seeing a lot of volume. We do sense, and it's everybody is saying it, then once the summer breaks, The traders are going to be back at the desk. The mutual funds, the hedge funds, everybody's going to be back full blast, and they're going to be positioning their book for the remainder of the year. So they're going to want to lock in profits. They're going to want to position themselves to look good because they need to keep their clients A, in the green, and B, attract new clients, right? So there's a lot of movement. With that, more trades, more volume in trades, volatility. Where it goes, up or down, hard to say. We talked a lot about the relative strength index, right? And this is a great chart. The last 3 weeks I map it. Look at SPY was 2 weeks ago. The S&P 62 or 61 and a half. It's 35.7 now. I mean, 2 weeks. If we go to the short side of it, it was 37. 30 is oversold. 35. Anywhere in the 30s, I start looking at it as oversold. But, the technical world says 30. It was 37. And now it's 64, 2 weeks. So this is, sure, the market dropped. I mean, was it, devastating? It depends, where you are. A lot of people are out of the market and just waiting for things to happen. Go take a look at our trade table. We made money during the last 4 weeks. We didn't put a lot at risk, right? When I say risk, we didn't go into something that was, pick a stock where we put everything into one stock and boom, it either made us or broke us. We used the bond ETF funds. We used the indices ETFs, Dow, SPY, NASDAQ. We used the sector table. We jumped in on some energy plays. We really, all while IT was running at the top. Well, maybe you bought one of the latest and greatest hot ITs and look at NVIDIA. It dropped how much? 53%, whatever. We try to break that risk for you. I would love to give you a 50% trade in 3 days, but I'd much rather give you a portfolio where you can go all in when we give you the buy signal, make your money in that trend, and go home whole, right? More than whole, right? So what happens? We don't buy at the bottom. We don't sell at the top, but when we get that all-in signal, boom, we go in heavy and long and strong. When we get the all-out, we get out. We don't mess around. And in between, we get the profit and loss protection stops using the Twomey investment principles or tips. Okay? So that's this week's. I want you to go to TwomeyStocks.com. Get all this information. It's on the front page of the website. It's a click. It's free. You can view it. Send me anything that you feel is either helpful or comments at info@TwomeyStocks.com. That's the number 2MEstocks.com. Have a great week, and we'll see you in the next couple of days with additional videos. And we trust that you'll be very, very happy with our product. James Twomey, the Twomey Stock Report, is September 5th, 2022. Have a great day.